And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Wednesday, October 19th, 2022. Well, the market didn't celebrate the anniversary of the 87 crash by putting in another crash. So in fact, we just kind of spent a lot of time revolving around levels, moving a little bit lower, moving a little bit higher, revolving around those levels, moving a little bit higher, moving a little bit lower. It's all in anticipation of the earnings. We are in the middle of an earnings season, actually still in the beginning, I'm going to say. And the bulk of the big boys report next week. That's leaving a lot of things in doubt and just kind of keeping things on edge a little bit. And as one company comes out with, oh, we beat, they run for the stock. And another company comes out, it's like, well, we're not sure what they actually did. They take it in every which way but sideways. So we're continuing to see a very mixed bag as the street, retail, institutional all try to figure this out. So, and how do they all want to factor it in, and how it just factors in moving forward, and how inflation and higher rates, et cetera, really are going to have an effect. And to be quite honest with you, I don't really think that anybody, including myself, can definitively say exactly how this is all going to come out. So what we ended up seeing today was, of course, Netflix coming out with some stellar earnings and a great little guidance forward, continuing to push higher today. And what it really did, I got to tell you, is that it just really pumped up. And I'll show you real quick. We'll go over to here and go down and go to Netflix. Oh, the volatility really came down by the end of the day. Earlier in the day, it was 104% vol. So it came screaming back down in the other direction pretty quick, which I find very interesting. But nonetheless, stock put in a stellar day, up 31 on the day. And primarily, it's still traded in the area where it was, but it closed at 240 yesterday. So that just reflects that. Now, Tesla decided to come out with its earnings today. And initially it was like, oh, these are good. Then it was like, oh, they're not so good. Then I was like, well, what are we supposed to do here? So the stock's been kind of moving around all over the place. Let's start here with the S&P. I don't really have anything to add, so I'm just going to review what I see happening today and what our possibilities remain for the balance of this week, particularly going into Friday. Remember, Friday is a quarterly expiration. So it's in October, so it's rather big, and a lot of things where I think were built up to that point, a lot of positions. So this is all, I think, going to get interesting over the next couple of days. And then we will get our resolution as to, A, what truly on a little bit bigger picture is happening here. Are we going to get a balance of an intermediate fifth wave down? Is the intermediate fourth wave complete at this level? So beginning there, I'm more or less thinking if it is, then I got to complete that this completed something, because this, even as a small fourth wave, if I'm counting 1, 2, 3, and this is a 4, this is way too big in comparison to what the 2 is, in comparison to what this 4 is, way too big. So either this completed intermediate wave 4, or this fourth wave, this intermediate fourth wave, is just really going to stretch itself out. So what we could have is an A, a B, a C, ABC X, right? If it's going to be a double ABC, and then we get another ABC. Or the X wave could be unfolding in a triangle pattern. Or the X wave could be in and of itself a double ABC. So here we sit, and it actually fits. I'll tell you why. Because if we're working through a corrective pattern, and the market really is not done interpreting enough information or having enough information to push higher or lower, well, then we move sideways. And that is when we get, if we're already in a corrective pattern, which we are, then it's just going to extend. while the market takes more time to get the additional information it needs to produce that larger move or continuation of the upside or downside. So let's take a peek at how it can be labeled. If it remains to be an intermediate fourth wave, which right now I continue to view as that, then we're going to go sideways. And that I probably will put a C there. And if anything, I would put an X here and just see how this all unfolds. Now, I'm not putting that labeling up because I can't definitively say. So let's just keep mental notes here of that this would be C, and then we have another ABC right now that would be labeled X. Now, much is going to depend on how this all develops coming out of here, because I'll tell you what I did do. I took this down and I put it on a line chart. Putting it on the line chart takes those spikes, the extremes that we see at particular time, a quick buy and then they slap it down, and a quick sell and they bring it back up. So this is on a closing basis. So again, if this is the completion point for intermediate wave 4, then we got a 1, 2, a 3, a little 4, maybe again. Need more information, need more trading to put a cap on that, because if it is a 1, 2, 3, a little 4, we need to do that fifth wave down to give us that 1, 2, 3, 4, 5. Now, can't really get too far from where it is, because the bottom of wave 1 of this proposed 5 waves down sits at 37. Actually, I can just go right there and say sits at 36.97. Actually, because of the, well, let me go back over here. Let's go back over and look at the candle, because that's going to be more. See, we got that one, and we got all of this here. So if we're taking that out and going to allow for this thing to go up, it's already exceeded, right? The first little pop, IBM, they loved IBM's earnings, by the way. Stock was up about $5, $6, $7. Now it's kind of coming back down to earth. So again, this is all just continues to get played out. And we kind of got to roll with the punches here. So because this is moving above where this is and creating a mess here, I still will go down to this level. But I'm still going to basically lean on ABC, A, B, 1, 2, 3, 4, 5, C, X. And until I get more, until the market tells me more. And we're going to get that information. It will all come through. So nothing is truly set and cast in stone, other than likely we're going to sit in a box that high. So we got 37.78, I'm going to call it, up top. And then today's low at 36.77, I'm going to call it. I'll round it up. So that's our zone. About 100 points. 100 points that gets to play around. And not really upset any apple cart in terms of were we breaking higher or do we break lower? So to answer one question that got posed to me yesterday, I'm sorry I did not get back to you a lot sooner. I hope you can now see that this is much too large to be a fourth wave. Now, if it is a 1 ABC2, get out of the way, because this would really produce a rally that would be quite strong. Could that happen? Yeah. I mean, I continued to take it out to the daily. It's not something that I really would fall in love with or want, but could we go from here and get ourselves back up to 38.08 and still up a little higher? Put in a 3, down a 4, go up, put in a 5 and be done with it? Yeah, we could. We could, all in the C wave, right? Still leaving the A and the B in place, all in the C wave. So we're going to come back down to that hourly. Let's open it back up so I can show you again. We got the A, the B. If this is 1, this is 2. We get 3 to come up about 38.08, as long as it does a 5. The 1 actually would be the longest wave. So it puts a lot of pressure on the whole pattern. So I'm not really excited either way. But to turn this into a bullish picture from here would really require some fancy footwork in terms of how this all gets counted coming down to this point. So I don't have that right now, and I don't want to even look at. I'd rather let the market make clear what the direction is, near term, midterm, whatever. Are we truly going to be in a rally phase that's going to knock the socks off of most people, as some are calling for? I don't see that right now, because I don't see, we'd all have to be sitting there swallowing hook, line, and sinker every piece of non-important stuff about that inflation is receding. And interest rates need to be, the Fed needs to pivot. And that I don't see as a continuation in the narrative that's pushing buyers in. What I do see in this narrative is earnings, and the earnings season that we're in. That continues to really put the effect on. And we're continuing to see kind of a mixed bag. IBM surprisingly beat the street, but not by a great deal. But I'm sure they're guiding positively out. So we still have tons of reports, and they've got to get factored in. And right now, a lot of that is happening right in a sideways move. We had some good sells today. We had a lot of really decent sells today. And the market broke back down below. But you can see they will not leave it here. They come right back in and they scoop, 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 scoop because of earnings. That's just the way it's going to be for the next week and a half. And then maybe then some, because we have earnings that roll out into November. So, and some of the bigger ones roll out into November. So what can we look for tomorrow? To be honest with you, if the market's intent is to go up and start to break higher, then it's got to push through all these moving averages. It's got to push above 37.78. And then we have, above all this, we have our resistance at 38.04. We have additional resistance at 38.20 to 23. And then we have resistance at 38.54. From here, that's a $140 move. Pretty big if it got all the way up there. Pretty big for the S&P. 3,800? Yeah. But even that is a solid rally from current levels. It would be up 87. That's a pretty strong rally for the S&P. Can it do it? Of course it can. Right? So that's the story. Continued breakdown. Where do I finally get to put the C and the 4 here? Is if it goes up, it holds. This is for whatever reason, and we start to extend lower, but they don't step back in and buy it. They just continue to sell it. And again, at this level, at this point in time, I feel strongly that it's going to have to be kicked lower by some mitigating factor coming in from outside, unrelated to earnings. So we'll see. Right now, I'm actually leaning towards C, ABC, X. And now we're going to do an additional ABC. Now that likely will take us through Friday. We'll see. So downside, we've got support all the way down. If it breaks below 35.90, then I'm going to lean pretty hard on, well, we're looking like we can go. Because about below there, we don't get a whole lot of support. You just look left, it's pretty black. So it's like falling into the black hole. We knew we have some support down about 3,500. We have support about 3,550. So again, follow the bouncing prices. It's not been easy, but that's all we got. We got against a little short term on our shorter time frame charts. I work with other factors such as the order flow volume profile, which gives me points of control, value area, high and low, et cetera, et cetera. Also, so that you know, you can continue to look at these, which I did point out and list in a response on the comment section on what these are. This is TTM underscore scalp alert. That's these. And this is TTM underscore TRC, which is the channels. So you can use those together. You can kind of see right now what are the channel lines doing? They're kind of actually angling up. That can change. And when this starts to not angle anymore, go sideways, you'll see that the channels flatten out. I'm running them here in my 5-minute as well, which is a little bit steeper angle. But we're just playing around here. We go up, we go down. We go up, we come down. So not much to do. And again, it kind of was like that a little bit today. The opening used to be, or has been in the past, and quite often, very clean and usable, as a matter of fact. In other words, you can catch those larger moves, make all your money before the first half hour or hour is up, and you're done for the day. We're getting a lot of confusion in the morning, at least here in the NASDAQ, of pushing and pulling and carrying on. So it was not as easy in the NASDAQ today. Back over here to the S&P. We do have support. We have our moving averages. This continues to widen a little bit, but both now are going flat. That tells me we're going to likely continue to go sideways, trade in a box, and come down. It might hold it, which it has done all day today, bounced up off of it. One time going through, came back, took it back really within the same hour. So we're not getting a whole lot. So we have the additional SMA down at 3660, again, support, 3640 support, 3590 support. So I think we're just going to hang out in the box until we get a lot more information as to where we should be taking direction for the coming weeks. Now over to the NASDAQ. And I'm trying to do this a little bit quicker than I have because I think we're all could use a little bit shorter of an update today or this week. Same story. You notice, gee, did he change that chart? It does say NASDAQ. It looks just like the S&P. Surprise. So again, AB, is that C? Possible. And if it is, what's this? ABC, is it an X? Possible. Both same. Hanging out, has a little flurry, gets bad, has a flurry to sell, pulls it back. So it's almost like it comes back to the mean, but not necessarily that clean. But it did have a halfway decent range today, I will say. This was the opening, and they ran it all the way back almost to 13,000. So again, we have movement, and you can tell it was rejected, even though the bar closed green, it was rejected. And then a little bit up, and then it was rejected and rejected. And then the downside was rejected and then hang out, little flurry, right? That's the earnings reports coming out. Here's Tesla. Here's Tesla trying to figure it out. So again, NASDAQ, S&P, we're stuck. We need more information. We got to let additional earnings come out, and it could hang in this sideways pause right into next week when we get Apple. Apple's on the 27th. AMD's on November the 1st, so we got a little bit longer to go. Amgen on November the 3rd. Amazon on the 27th. Then we have Google on the 25th. And Intel on the 27th. Metaverse on the 26th. So you see 25th, 25th, 26th, 27th. We're going to see some breaks there. We're going to get some stuff. Excuse me. Microsoft on the 25th. Again, so we're stacking it up. on the 25th, 26th, and 27th. Now, coming back down, NVIDIA will be even later moving out. Tesla today, Twitter, we get on the 27th. So we're really just pushing out to next week. So I'm not expecting a whole lot. We might get some bouncing around, a lot of bouncing around between now and then going into Friday's expiration. But again, we'll see. Nothing's cast in stone. And as we all know, there are no guarantees in the market. Upside here, we have resistance at 11,207. It remains in place, even though it got tested. And even though it got broken, came back and surrendered. So, and look what's happening to our moving averages. 20 is going in one direction, 8's here, 4, and then the 50 is going like, what are we supposed to be doing? Oh, we're going to turn. And 200s, we got the EMA's flat, the SMA still angling lower. And where did this thing come right down to? Touched it. Touched it at the one in the 1 o'clock to 2 o'clock hour, touched it, and then went nope and took off. I suspect that it's going to remain the same again until the much larger Titans report. So Tesla, first out of the batch, and even as we look at it, they're not moving this thing all around. It's been down as much as 11 from the close. It's been up as high as, I think, 26 or 27. So, and that was actually not a good choice. All right. If it starts to come off, we have support at 11,063. We have it down here at the SMA, the 200, the hourly 200 SMA at 11,042, 10,980, 891 down to 78. So right in there, 10,713. And then we're looking there. And only because that was the previous low of wave B. So that's our support levels. And that actually is the anchor for this wave. Now, so that's still the area to watch. 10,485 breaks below. All this is done. And the next leg down has truly jumped into force. And that's about it for today. A lot of sideways action, not much else. So hope everybody has a really great trading day tomorrow. Let me just take a quick peek. I will share with you, where are we? There we are. That what we have tomorrow are jobless claims, Philly Fed, existing home sales, jobless claims and Philly Fed, pre-market existing home sales at 10 a.m. I am sure that we will get some direction from those on the inflation front, but the market is tending to kind of hold that to the side. There might be a reaction, but then they immediately just pick up to wherever they were because of earnings. So that's going to be it for today. Our next update will be on Thursday, the 20th.